Welcome to Geopolitics Decanted. I'm your host, Dmitri Alperovitch, chairman of Silverado Policy Accelerator, a geopolitics think tank in Washington, D.C. Today, I'm pleased to welcome a returning guest, Chris Weafer, CEO of Micro Advisory, a Eurasia-based business consultancy who has been based in Moscow and the region for the past 26 years, where he's been advising Western clients. He's a phenomenal fountain of knowledge about the true state of the Russian economy. We last had him on in January, and we thought it would be great to have Chris come back and provide an update on what has happened to the Russian economy in the last 9 months. Welcome back to the show, Chris.
Thank you, Dmitri, and thank you for inviting me back.
Terrific. Well, the issue of the Russian economy is, of course, absolutely crucial to understanding the direction of this war, and perhaps is one of the only factors, along with the state of volunteer mobilization, that could potentially pressure Putin to back off his current maximalist objectives in Ukraine. So I thought it'd be great to start with a macro update on where things stand. Last time we talked, the ruble was in decline. Inflation was still very high. You had an increasing number of bankruptcies, particularly in construction and agricultural sector, a lot of impact on SMEs in Russia. What has happened in the last 9 months?
In some respects, the picture is a lot better today. In other areas, it's deteriorating. So it's never a straightforward answer when it comes to Russia, as you know. And the economy really is no different. You know, at a headline, what's changed is that, first of all, headline growth is a lot lower today than it was for the last couple of years. In 2023, we had over 4% GDP growth, but that was a bounce out of the weaker year in 2022. But last year, 2024, headline growth was 4.3%. For the first 6 months of this year, it's just been a little over 1%. And the expectation is that at best for this whole year, it'd be about 1.2%. So about 1/3 of what it was last year. But putting that into context, the current level of growth is, I suppose, say relatively safe. It's a lot lower than it has been, but it's safe. There's no credible risk at this point of a dip into a contraction or into recession, or any evidence of an economic crisis or a social crisis or even a financial crisis. But the growth levels have definitely come down and will stay at this low level, like 1 to 1.5%, until we get something changing geopolitically. Now, there have been some, as always, when you talk about the Russian economy, there are plenty of people who will tell you that everything is great and Russia's on the brink of a boom and there's really no problems whatsoever. And there's others that will tell you, will give you reasons why they believe the economy is in much more dire straits and facing a crisis. And it's because, the people kind of with a political bias in either way will always find data points that support their viewpoint if they ignore other data points and take things out of context. And that's both sides, both people who will tell you the economy is great and is in great shape, and others who tell you it's about to face disaster. The truth, of course, is always somewhere in the middle. In terms of the good news or the better points, you mentioned in your introduction, obviously, inflation and interest rates and bankruptcy. That side of it has improved. As you recall, we talked the last time, one of the reasons why there was, putting into context, why there was such a strong rate of growth last year, 4.3%, is a lot of it was to do with military industrial spending. It was a lot of the money that was being spent not only directly on the military, but in particularly money that was being paid to soldiers, people who are working in military industries, the incentives, the signing on fees, etc. For example, I was recently out at the immigration center just doing my normal visa work, but there was a military recruitment stand there, and they were offering 60,000 to people who were willing to sign on, plus the salaries. Now, that's a heck of a lot of money for people who are on, say, a minimum wage or a basic wage in Russia.
And so that's more than doubled. I remember early on it was 20,000, 25,000.
Oh, it's gone up a lot.
It's gone up quite a lot.
Yeah, it's gone up a lot as they've, they're desperate to avoid any additional mobilization. So we can talk about that separately. But mobilization in September 2022 was badly handled. It was badly timed. It was badly conceived. And it was the one period in the last 3.5 years where you could say there was a real danger of a major public pushback against the Kremlin. They won't do that again. But in any case, going back to the economy, it was that all that money spinning around the economy, which is driving a huge boom in the consumer sectors, boom in new cars, durable goods, and all sorts of non-essential spending. So late last year, the central bank, supported by the economy ministry, the finance ministry, they went to the Kremlin, they went to Putin, and essentially told him that unless something was done to cool this excessive consumer spending, overheated economy, as they described it publicly, then there was a danger that inflation would become out of control and that there would be a much more difficult crisis in the economy to deal with later on. And, we do know from observing the last, 25 or 26 years that Putin does care a lot about inflation. I think inflation and external debt are probably the only two economic issues to keep him awake at night if he ever does stay awake at
Well,
night. But
I'm
these are
sure
the
because
two
of the
things.
experience of the '90s, right, where runaway
Yes, I
inflation
think
and
that's exactly right.
the default
Yeah,
really had a huge impact on
and
Yeltsin's
even,
presidency.
given his age, he will have grown up in a period where, people didn't have a lot. But the 90s, I think, yeah, absolutely, that completely destroyed the country, destroyed politics. And it's the one thing that he really could lose public support, which he relies on heavily. So inflation control is top of his economic agenda. And of course, he doesn't like to have high external debt because that undermines your sovereignty, as he's mentioned. But inflation, so he gave them permission for 21% interest rate, which absolutely rapidly did cool appetite for new borrowing and for credit cards and for spending. But of course, as you said also at the introduction, it led to major strains in parts of the economy, particularly the private sector that are not directly supported by the state. So we had a big surge in bankruptcies and small businesses in the agriculture sector and the construction sector in particular. But inflation did come down, and consumer spending did come down. So this is one of the kind of like the positive elements. Inflation peaked at just over 10% at the end of March. It's now down just below 8%, and it's heading down. Now, it will rise again early next year when the VAT rate will go up from 20 to 22%. We obviously talk about budget issues in a second, but we've known from experience, for example, in 2018, when VAT went from 18% to 20%, that added about 0.6% to headline inflation for 4 to 6 months. Central bank openly said that's what they expect this time, and there's no reason not to assume that. So we'll get a blip in inflation in the first half of next year, a minor blip, but they're still targeting about 5% inflation at the end of next year. So I feel like that's kind of a positive trend, and it means therefore the central bank have now started to bring their high interest rate down. Today it's at 17%. We expect one more 100 basis point cut by the end of the year, so that'll be 16%. It's still pretty high, and it's still causing strains for companies, and it's still delaying investment spending, as we see from surveys, but it's going down, and it'll go down to around 10% or 12% at the end of next year. The other factor
Yeah, yeah. I
taken
mean, just in comparison, the U.S. Fed rate is 4%, and President Trump thinks it's too high and wants to cut it further, right? So 17% is almost
absolutely. So
unimaginable.
it's a lot. Emerging markets, I guess the thing about emerging markets is those high rates are not that damaging, but because there's an assumption of high GDP. For example, you get 10% in Central Asia, but GDP is averaging about 6% because the high interest rate goes with high growth. But Russia's is not in a good position. This is one of the negatives. It's got a high rate of interest and now a low rate of growth. So that high rate of interest is actually very damaging in terms of future investment and recovery. And then just, finishing the kind of the more positive side, employment remains at about 2.4%. So there are no kind of employment issues. Wages are still going up in real terms above inflation, less than they did in 2023 and 24, but still nevertheless positive. If you like, the base of the economy, therefore, is stable, and there's enough money being spent on the budget to support kind of key industries and social spending. So the economy has come down from a high rate of growth to a low rate of growth, but it is stable and it's sustainable at this level. There's no current reason to assume a further step down to, into negative territory. The big issue or the big question, I guess, or the concern is on the budget. And also we can talk separately about the damage that this long period of military spending and low growth is doing to recovery prospects. Put that to one side for a second. But the budget is the main issue, and that's really the big talking point. Again, people who want to talk about Russia heading to crisis will definitely focus on the budget. The plan for 2025 was that the budget deficit will be only 0.5% of GDP. But by the middle of the year, it was already 2.2% of GDP. So instead of a $10 billion deficit, by the middle of the year, you were already at a $40 billion deficit. Now, at that point, as I say, it was easy to do the calculations because Russia has been relying on the sovereign wealth fund, which is called the National Welfare Fund in Russia, and which was significantly boosted with like almost $100 billion of extra income in 2022 because countries like the European Union or regions like the European Union had to continue buying Russian oil and gas and other materials. They weren't ready for sanctions, which is, at all. And therefore, Russia had an enormous windfall of financial external trade surpluses, current account surpluses, and export receipts, and built up the National Welfare Fund, which has been funding the budget deficit and the military spending for the last several years. But the total available, the liquid cash part of that National Welfare Fund is now down to around $40 to $50 billion, depending. I mean, there's a lot of gold in it. So as the gold price goes up, obviously it helps Russia's financial position. But let's say 45 billion. But you say, well, at the middle of this year, they had already burned through 40 billion. So like that's another 12 months. So you got lots of people then talking about, well, Russia's going to run out of money, in April or May of next year. And based on that calculation, that's absolutely correct. So there has been a real, kind of debate and soul searching, etc., over the budget within government over the last few months, what to do. So what they've decided on is actually a good solution. And again, time and time again, we see that Russia has avoided crisis because of the quality of management and people in the financial agencies in Russia. I mean, whatever about the military side or security side, but the people in the financial side, like the central bank, the finance ministry, the economy ministry, have continued to show, kind of really professional behavior, and they've helped Russia avoid a financial crisis over the last several years. And as I mentioned, the high interest rate strategy, cooling the economy, etc. They have been, and the same in dealing with a potential banking crisis a few years ago. They've avoided all of that. And
it's been really a remarkable high wire act that they've pulled off for the last 3
absolutely.
years.
Yeah, no, it has, and that's a good way to put it. You are on a high wire, and there's landmines either side of you because you make a misstep, and then that crisis would not be far off, 100%. Like there's no upside at this point; it's only downside, and they've avoided to step down so far. But the solution that has been proposed by them, and it's accepted by the Kremlin, it's now going through, is first of all funding the budget deficit is no longer going to be the National Welfare Fund. Putin has said that he wants to keep that pool of money. I guess it shows that Russia's got some reserves. Instead, they're going to switch to funding the deficit with some additional taxes. I mentioned the VAT rate, but mainly with local debt. Now, Putin has always, he dislikes debt, but he particularly dislikes external debt because it undermines your sovereignty. And he preached about that a lot all those years ago when countries like Portugal, Greece, and Ireland were all in trouble. And for him, that was QED. He was right. But so Russia's total sovereign debt currently is only 16% of GDP, of which only about 1% is external debt. So there's plenty of scope to borrow. There's also a lot of money in the country. And to some extent, that's a consequence of sanctions. It means companies and billionaires and people have not been able to spend their money outside of Russia. There is a big accumulation of money in the banks and in savings accounts in the banking system, more than you would have expected, probably because of sanctions to some extent. So they're going to tap into that. Now,
But don't they have to raise interest rates to attract that money
that's a
then?
good point. Yeah, tying it together because you say everything is connected. As I mentioned, the fact that the central bank, they raised the interest rate to 21%. in order to kill the consumer boom, in order to prevent inflation. So inflation is now coming down, and as I said, they have reaffirmed their expectation that inflation will only be 5% at the end of next year, despite VAT going up. But the interest rate is not coming down in step with inflation. So it'll be 16% at the end of December. We expect inflation probably be around 7.2. So at the end of next year, central bank are saying 5% inflation, but we're still expecting the interest rate to be about 12%, maybe 11 or 12%. And the reason for that is exactly as you said, it's they need to keep a high real interest rate in order to attract people to buy government debt, to buy bonds. So and keeping that high interest rate like higher than it needs to be for inflation control is another reason why the economy cannot get out of this kind of low growth trap, because that high interest rate will continue to affect companies, borrowers, the small industries, construction sector in particular. It means that mortgage rates will still be too high. Lending rates will be too high. So you're not going to get any recovery in the real estate market or the construction sector or amongst the small, medium-sized enterprises that are heavily indebted, because that interest rate is far too high for the normal economy, but it's necessary to make the bonds attractive to fund the deficits. So in that sense, there's no reason to fear a financial crisis or a government running out of money, but the consequence is that you are absolutely limiting, if not preventing, any kind of recovery in the economy because of the high interest rate. And I should say,
Although I guess they have another option of just going to the state enterprises like Rosneft and just tell them you shall buy bonds, right? Regardless of what the interest rate is, right? They can
yeah,
order
well,
them to do so.
only a few of them. The problem is, though, those companies are all under strain because, like I said, Gazprom, of course, reported heavy debts and hasn't paid a dividend for the last couple of years. So you can't, because Gazprom would normally be the default kind of piggy bank, but that's not available. And other big, like the oil sector, the profits are well down because remember, the oil sector is effectively nationalized, even though the state only has 51% of Rosneft equity and doesn't have any equity in Lukoil. But the companies are all operating as if they were state companies. The deals that are being done for Russian oil with India, with China, with other countries, they are essentially being negotiated by the administration, by the Kremlin. And companies like Lukoil and Rosneft are then told, this is the price you're selling. You have to give this discount, etc. And, their costs are higher as well. So in other words, the bottom line, they don't have that money as they used to have. So there's some money there. Then the banks are very profitable, but no, you can't rely on the state companies providing cash, as was the case before 2022. So you're going to need people to take their money from deposits and banks. You're going to need a lot of people still have a lot of cash under the mattress. They don't trust the banks. So yeah, this is going to be a challenge to get that money. But on the revised budget, they're planning a budget a deficit about 2% this year, about 1.5% next year, and then a little over 1% for 27, and then a balanced budget in 28. Now, the problem with that's a nice picture, which again, the optimists will point out. The problem with it is that we came into this year expecting a budget deficit of only 0.5, and now it's 2.2. So what's going to happen next year? The same thing that could happen.
Putin has been promising to cut military spending for several years now, and he's again promising to do it next year. But as long as the war continues, of course, that won't be possible.
How can you do it? Yeah, how can you do it? So that's a huge unpredictable factor. And then look, the critical assumption here, or there are two critical assumptions in this whole, kind of the scenario that I've just pointed out to you, which is stable growth at a low level, but stable, no crisis, budget being able to be funded, etc. In other words, Russia able to ride this out for another couple of years. The critical assumptions here are A, the oil price, and B, US sanctions. The oil price, obviously, if it were to go down to $40, even though the level of the amount of oil and gas taxes in the budget is significantly lower than it used to be, it's still important.
It's about a quarter now, right?
Yeah, it is. And it used to be 51%. Now, okay, people will immediately say, yes, but that's because, Russia has lost the European gas market and is selling oil at a discount. And that's absolutely correct. But we do a calculation. So on a like for like basis, assuming that there was no sanctions and Russia was operating normally, then oil and gas receipts would probably be about 35%. So it is still well down from the 51 it was. It would normally be today 35, but because of the effects of sanctions and the war, it's 25%. But it's still the biggest chunk. So if you were to have that, for example, with an oil price collapse, then you've got an immediate budget problem, which means that you're not going to be able to cover that probably with borrowings for more than maybe less than a year, and then you're in crisis. Or the
And
other
Chris,
factor.
I seem to remember in January you were saying that below 50 is where you thought the Russian economy would really start having trouble. It stayed above that. Right now, the euro's price is around 55 as we're recording this. So it's close, but it's not quite there.
Yeah, it's probably, and maybe a little bit less now because we have actually seen some broader tax recovery in other areas. For example, there is a change in the income tax bands in Russia, which have actually worked out a little bit better than we thought. So, for example, as your income goes up, then you move into a higher tax band. But of course, in Russia, the higher tax band only affects the additional income. It's not applied to your whole year's income. So, in other words, income tax in the fourth quarter this year should go up because more people will be moving into a higher band and paying a higher rate of tax, but only on that higher income, not on all their income. But nevertheless, it has. So whereas I said maybe $50 was a crunch point in January, it's probably 47. So it's not that far off. It's not 30. It's somewhere still in the 40s, maybe. Now, let's just say 45, just to be generous, but 46, probably 47 would ring alarm bells for sure. But the critical one, I think, more than that, because the oil price looks okay. I think, obviously Saudi and other countries are, obviously just as interested in keeping the oil price stable tick. But the US sanctions are the key one. In other words, what will President Trump do? If he were to adopt some of the sanctions that are now being progressed through Congress, which is targeting the buyers of Russian oil with higher tariffs or some other measures that would significantly reduce Russia's export income, not just on oil and gas, but on other materials, whether it's coal or steel or nickel, whatever, that would be a huge and significant game changer. Like that's the sword of Damocles hanging over the Russian budget and therefore the Russian economy right now.
So you believe, I mean, there's a school of thought that we've sanctioned a large section of the Russian economy, although a large section of it remains unsanctioned, and doing more is not really going to help. You don't believe that. You think that additional
Yeah.
sanctions could really weaken the Russian economy quite
Well,
significantly.
look, additional European style sanctions really don't matter. And we are well overdue the 13th sanctions package from Europe. Reportedly, it's going to come this week, but it was supposed to come in the first week of September. So we're really late. But it'll come. But those sanctions don't matter. And in that category, they really don't matter. It's kind of just more adding a little bit more pain, but nothing that much. No, I'm talking about the sanctions that to President Trump has been talking about that have been proposed by Senator Lindsey Graham, which is huge tariffs on countries like India and China and Turkey, because we have seen in the past, particularly Turkey and India, they do not do anything that would put them at risk of secondary sanctions from the US or some additional action from the US. Whenever there is a major threat, for example, the US Treasury's big campaign targeting Chinese and Asian banks not to deal with Russian banks or not to violate sanctions, there was a huge step away. And Russia had a real problem for about 6 months finding a workaround. So if the US were
Although,
to say,
although I mean, he has raised tariffs on India by 50%, and they have not budged and said that they will continue to buy Russian oil, refine it, and sell it to
but
others.
this is it, this is India only.
Yeah.
And yeah, and that's, I think that's kind of work in progress. You're absolutely right there, but the Indians are defiant. But also, of course, it's always important to bear in mind that that action against India is against the context of, still very intense and still unresolved broader trade talks between India and the US.
That's right.
There are plenty of people who assumed that that additional tariff was put on just to increase pressure on Modi to, to agree to U.S. terms, and then it will come off. But the Indians are being a lot more stubborn than everybody else has been, and therefore it remains. But what we have seen is that if there was a direct threat to China, it would back off. The Chinese would stop or greatly reduce their purchase of Russian oil and not make their life any more complicated with US. And the Turks 100% every time. But whenever there's any smell of any threat of secondary sanctions, they back off. And one assumes the United Arab Emirates would be the same, and they're the biggest buyers of Russian oil. So, yeah, everything we said about the stability and the budget to be funded, it is absolutely predicated on the assumption that the US will not come with those killer sanctions. Some tweaking of existing sanctions, yeah, they don't make that much difference. But if you're talking about the killer sanctions of huge sanctions or tariffs against China and Turkey and the Emirates, that would be a big game changer, in my opinion,
Yeah.
and then that would put Russia in a more
I don't
difficult
see
position.
much likelihood of that.
It doesn't, and this is what we hear in Moscow as well, that the Russians do not expect President Trump to do that. They expect that they've got more time. But I think that will also change coming into 2026 because sorry, not to change the subject, but the Russians are very, very aware and very mindful of midterm elections in the US next year, and they fear that President Trump's ability to kind of to do what he wants and agree what he wants may start to be undermined. He may have to start working more with Congress on domestic issues with the midterms in mind. So that's something that they are aware of. So right now, you're absolutely correct that the Russians do not assume that Trump will do anything. But I think their confidence in that will not be the same coming into 2026.
Is there another way to go at this without the tariffs or sanctions? I was just in Riga last week at the Security Forum, and there was a lot of talk on really doing more to crack down on the ghost fleet that is transferring illicitly these oil or LNG gas supplies to others. If the Europeans really step up on enforcing that, is that going to have a huge impact?
Well, look, if the tankers were to be stopped, then yeah, you're stopping the exports just the same. So of course, but that's a hugely dangerous action because, of course, as far as Russia is concerned, these tankers are using international water, have the right of passage. And you're talking about the tankers going out to the Baltics, which is
That's
basically
right.
oil from Primorsk and Osluga. So they're saying they've got the right of passage, and the attempt to block them would be almost an attack on Russian sovereign assets. And they're threatening to kind of arm these tankers and provide military escorts or navy escorts for them. So, essentially, they're saying that you try any of that, then you're in a whole different, escalatory trend with Russia militarily. So I don't know is the answer. I think that's probably the reason why it hasn't happened, because when you look at a map, you think that there's at least one big chokehold up near Denmark where it would be easy, one assumes, to stop tankers and inspect them. But Russia said you do that, then you essentially are attacking our sovereignty and will take appropriate action. So I guess that's the reason why it hasn't happened to date. But yeah, you're right. If you were to stop the tankers in some way, then the volumes dry up quite a bit, and then you've got a budget problem. So that's true. But how to do it without risking major consequences? It's the same with the discussion about the frozen central bank assets. In theory, you take that $300 billion, you give it to Ukraine, that provides a heck of it. And of course, Europe is also looking for ways to ease the burden on itself, because without broadening out, a lot of the big European economies are in trouble, or at least they're not in good shape.
Yeah, Germany is in real
Leaders,
trouble.
yeah, absolutely. And then, leadership wise, France, the UK, there are big questions. And of course, the budget is a big part of that. So nobody can, therefore, to continuing affording to give huge volumes of money to Ukraine is an issue. It's becoming an issue. Looking at that 300 billion, you think, well, that's an easy one. But of course, it's not an easy one, because you take the underlying assets, then for all the arguments that everybody knows, undermining the credibility of the Eurozone, leaving Belgium or Euroclear at massive legal risk, like forever. Chinese and the Saudis have said that if you do that, we might take our money out of Europe. So all these reasons, but nevertheless, there is a discussion about how it might be done, and I guess that the discussion is leaning towards using the money as a source of income for a long period of time, so that the income can be hoovered out of it, maybe 3 billion a year, and that could then cover the servicing of debt to be raised for use for Ukraine. But again, it's like there's a lot of discussion on points like the tankers and like the assets that in theory seem straightforward, but they're not straightforward because they would have major consequences, long term if you were to do them.
And of course, those discussions have gone on for several years now,
Yes.
so we still haven't seen action. The one thing you said in January that really stuck with me is you said the headwinds are building up for the Russian economy. 9 months later, do you feel like the headwinds are at about the same wind speed, or are they growing? How would you assess it?
No, they're growing. Yeah, I think that's the headwinds are definitely growing. Obviously, we've had said that the big headline change in growth from 4.3 down to about 1.2. As I've said, I think there is now a level of stability at this low level because of low unemployment, because of good, decent wages, inflation rate coming down. So it is stable at that level. But the headwinds are definitely higher in the sense that there are now some very obvious risks or issues which could, if they turned badly, could take the economy down into contraction territory and then lead us towards that crisis that a lot of people fear. So the headwinds are definitely a lot higher. You get a lower oil price. You're hitting the budget, you're straining the resources. Russia is in a weaker state so that any additional kind of external or internal pressures, which might have been absorbed in more normal times, would be a lot more damaging now. So it's in some respects you can argue it's stable at the low level, which I have done, but on the other hand, it really can't withstand any more kind of pressures without dipping into maybe negative territory. And the central bank have said the same in their various scenario analysis that they produce. They talk about, scenario with lower oil price or additional, particularly US sanctions. And they're then coming up with -1 and -2% GDP growth. But they assign a low probability, but nevertheless, they still do publish those scenarios. And Russia is in a weaker position today than it was in January to deal with any of those external pressures.
So let's talk about one of those pressures, which is the Ukrainian strikes on refineries within Russia. At this point, they've struck, I think, about 30% of the capacity of those refineries. Not all of them are down for significant periods of time. Some of it, that capacity gets brought out online pretty quickly. But they've changed their targeting quite a bit. They used to target these big storage tanks to produce the huge fires, but not for much effect because, of course, it's very easy to quickly repair those tankers. Now they're going after the refining equipment, which is much harder to replace, and there's long delays on that replacement. So it's having more of an effect. And of course, you also had the summer, a lot of maintenance that was done in those refineries, just regular summer maintenance. So you're seeing some pressures on the Russian fuel sector, right? And you're seeing gas
Yeah.
lines across Russia. What is the impact both on the economy and just what are you hearing from the population in response to these attacks?
Yeah, I would say that there's two things. One is that there hasn't been any obvious impact on the European side of Russia, so like west of the Urals. About 2/3 of the population live in European Russia. And there really haven't been any reports of queues at gas stations or shortages or any significant price. The government seems to have been very careful to make sure that at least the European side of Russia and the big cities in particular have not felt any pressure. Now, the reason they've been able to do that is two things. One is there are reports of major outages and delays and some shortages in the rest of Russia, the Far East, Siberia, the eastern side of the Urals. But I guess one assumes that reporting is more controlled. We're not going to, like, if there were gas station outages in Virginia or Maryland or whatever, you'd be seeing it on, your local news every night in Washington. You don't see it on TV in Moscow because that sort of negative news is rarely broadcast. So it's more local and therefore it's easier to kind of contain. And therefore the answer is we're not really that sure what the full impact is. We are aware of some reports of gas stations being closed and some reports of some shortages and price increases, but how widespread it is, it's very difficult to know because you don't get the official data and you're not getting full news coverage, say in Moscow, about what's happening out in Siberia. On the other hand, it isn't that bad as much as I think some of the suggestions have been. And the reason for that is because Russia has suspended exports. So the real impact has been on the income side. It's not disrupting, kind of ordinary Russians' lives in the sense that they can still buy gasoline and go driving. But that's because Russia, used to export. Russia was by far the biggest exporter of oil products in the world. About 2.5 million barrels of oil a day of refined product were refined. All of that used to go into Europe I think it was the ban kicked in February 2023. But since then, that product has gone to Turkey and to Brazil and to the Emirates, and a lot of it has found its way up back into the European markets indirectly. But Russia has had to suspend the export of many types like gasoline and other types of oil in order to make sure that the domestic market was fully supplied. And that's cost the budget. And that's led to budget deficit. So there's a financial consequence. There hasn't been any kind of social consequences. As I say, the government has been careful to avoid that, and they always will, because the narrative from the Kremlin, of course, is that life is normal and that people are not that affected by what's happening down on the border and in eastern Ukraine. So it's very important, therefore, that issues like inflation are brought under control, that people have jobs, that health services work, and that they can buy gasoline. But the pressures on the budget, the balancing of that is that there are growing pressures on the budget, and that there are clearly shortages in other parts of the country, which is being only patchily being reported. But, again, it could change depending on how successful the drone attacks are. It could put more pressure on. We could see that. Winter is not as bad in Russia in terms of refined product because people drive much less, as you would expect, in very harsh conditions. And heating is all gas. It's not kind of diesel or heating oil, etc., as it is in many other countries. So to a large extent, therefore, the pressures will go down through the winter months because the demand for gasoline and heating oil, etc., is low in Russia in these months, and therefore, they kind of went past the point where peak pressure could have been or peak damage. And it should be a lot easier. But it all depends on if Ukraine manages to hit a few more big refineries. And, clearly the picture will change if they don't. But then there's always adaptation. So my answer is that there's nothing obvious. I mean, I pass gas. I'm in London right now, but I was in Moscow up to 2 weeks ago, and there was no sign of any issues at any gas stations, just normal. And that's because the government would be very been very careful to ensure that. And they've done it by passing the pressures out to the regions and also by banning exports, which has cost them money on the budget. What happens next will depend on, I guess, the military action. But if there's no change, like there's no escalation, then the situation should improve through the winter because the demand for gasoline is a lot less in Russia in winter months.
Let me ask you about the other pressure. You've now had millions of men that have cycled through this conflict in Ukraine. Hundreds of thousands have died. How is the labor force adapting to this high level of military service?
Yeah, not well at all. And it's not, again, the context is that Russia was in any case facing, or not, it was in the beginning of a demographic decline, which particularly was affecting the workforce. So, for example, in 2020, a big report was done which projected a reduction of up to 10 million workers. Like the workforce in Russia is about 80 million at that time. And they were projecting that it would go down to 70 million by the end of the decade, just because of the demographic trends, aging and retirement, etc. Again, there's the consequences of what happened in the 90s and the immigration as well as low birth rates. So there aren't enough people coming in to the workforce. There weren't enough people born in the 90s, which means that there aren't enough people to have babies, in the last couple of decades, etc. And therefore, as people are retiring, they're not being replaced. And therefore, that trend is there, whether it's 10 million or 5 million. Again, you never know for sure. lot of assumptions, but it's on decline because of natural reasons. Secondly, as you mentioned, of course, huge absorption into the military, but also not only the military in terms of soldiers, but military industrial complex, all these factories that are running 24/7 to keep the military supplied. Um, again, enormous demand for workforce, which has taken people away from other private sector industries, factories, etc. And then on top of that, you have a fairly active campaign by government to send back migrant workers from Central Asia, particularly from Tajikistan, after the Crocus City attack in early last year. And there is a strategy
because of the threat of jihadist attacks.
Yeah, absolutely. It is absolutely constantly being talked about in Russian TV. Tajikistan being right up against the border of Afghanistan is a hotbed of kind of Islamic radicalism, and these people are coming to Russia, kind of stuff, and therefore they need to be better controlled. And it's led to it that, again, hard to know how many because data is never that reliable, but for example, Yandex say they've now got vacancies for 20,000 drivers in Moscow city and region. They would all previously have been, most of the drivers are from Central Asia, so they're 20,000.
This is basically their Uber equivalent service in Russia.
Yeah, they're Uber equivalent, exactly. The construction sector, I mean, you can't pass a big building site anywhere in Moscow or Moscow regions without every second billboard is saying, do you have building skills? Are you a plumber, a carpenter, electrician, whatever? Please come in. So the construction industry is probably short at least 50 to 100,000 people, again, according to their reports. And various other reports, it's talked about anything up to 1 million people, now currently in kind of job vacancies. And that's growing because the decline in the workforce demographic, and because people are being sent home or not being allowed in from Central Asia. There is a plan to bring in actually up to 1 million workers from India. It's viewed as a better alternative because Indians are, Hindus, they're not Muslims, they're not radical. But of course, the problem is that people from India don't speak Russian.
You do have a lot of Muslims in India, so they're not all Hindu.
Well, you do, yeah. I guess they'll do the process. In any case, you're absolutely right. And this is, of course, moving beyond just the economy today. The key problem is the longer this, the conflict continues, the longer Russia's in this kind of war economy, and then the longer it will be before it can get back to dealing with kind of problems that were known before the war and normal development issues. So in other words, the longer it continues, then the more difficult it will be to go back to a more normal economic trajectory, the more expensive it will be and the longer it will take. That's kind of, in my opinion, that's the real impact of what's happening right now. If we don't get killer sanctions, Russia can continue to grind through at this low level of growth for a couple of years. Hopefully not, but it could do. But the real problem will be getting the economy back to something kind of more of a normal trajectory. Will be expensive, will be longer, will be more difficult. Russia could easily lose 10 years of normal economic growth, even if the war were to end next year.
Well, the big takeaway for me is the headwinds continue to grow. They're
Yes.
building up, but collapse is certainly not imminent. And Putin has still some runway, perhaps 12, 18, 24 months of continuing this. Chris, thank you so much for your great insights. I hope you come back again soon. Really great pleasure.
Thank you very much, Dmitri. And yeah, no doubt 6 months' time, we'll have a lot more to talk about. Thank you for the opportunity and the time.